Welcome to The Deal. I'm Suzanne Stevens, reporting from The Deal's M&A Outlook 2009 conference. I'm here with Joe Berkery of the middle market investment firm Berkery Noyes. And Joe, I'm curious, middle market, what kind of deal activity, if any, are we seeing now?
Suzanne, we've been seeing some fairly good activity up until probably the last 8 weeks. And we've completed quite a number of deals up until that time. But what we're finding towards this last couple of months of the year, we're finding quite a slowdown. And we will still close transactions, but there'll be transactions where there really is a need to buy, an absolute opportunity for the buyer. We're finding that private equity groups are really having difficulty in getting debt and getting these deals completed, and a lot more cautious than they had previously been.
So is it, PE has been sidelined for quite a while. I'm curious, the last 8 weeks, is it the volatility we're seeing in the market that's got people pulling back?
It is. It's a much more, well, it really is the access to debt. And the private equity, whereas the strategic buyers, our deals are basically going through. But with the private equity groups where they need debt for the transaction, that we're finding almost drying up at this point.
Joe, what are your thoughts moving into 2009? What's the outlook there?
I think 2009 could be, it's still up in the air. What we heard here today is a little varying degree of information to some point. I think most people were saying 2009 is going to be a difficult year, but a couple said in the next 3 to 6 months things will turn around and change. So it's a little hard to tell. I think that 2009 will be good for a number of our transactions, but it's going to be the items that really have good quality product, good profits, and good revenues. And the opportunities for those as sellers are going to be excellent.
Any particular sectors you think might be particularly active?
Well, I think we're really active in several sectors. We find education really good at this point. We find healthcare
education
also
in terms of education
actually,
software?
Education would be for-profit schools. That would be in some of those areas, mainly products that would go for colleges, software items for the elementary, junior, senior, high school areas, items along that line.
And I'm sorry, you were saying healthcare also?
Healthcare, we're mainly in the information ends of the business for healthcare, and we're finding items like we just sold Up to Date. Up to Date was a handheld device with 350,000 doctors providing various information on medical problems and issues that they can access within the hospitals. That sold very well, and we had many buyers on that. So that type of product is still going to be of high interest going forward, and is at this time. And the strategics will be buyers of that more than the private equity groups.
Joe, we have a new administration coming in January, a new president, a new Congress. What are your expectations for how an Obama administration might affect deal making?
Well, I think that actually, I'm not sure that the Obama administration itself will affect it. I think there's maybe going to be a good mood for the country, though. That will be a helpful item. But the market itself will change and will have effect on that. So people are going to find ways to do business in a new way. And really, that's what it is. I mean, the new way is the old way, and I think we've all heard that various times, and many people have written about that. But we're back to the old times when there were lower multiples. There were less debt. Debt was not as easily available, and the multiples on debt will be much lower than they previously have been.
Joe Berkery, Berkery and Noyes, I appreciate you stopping by.
Suzanne, very nice to see you. Thanks very
so
much.